So I would say that the most common conversation I have with my sole trader clients at this time of the year, with starting a new financial year, is it time for me to go to a company structure? So today's podcast is all about when is it time, what should you know about switching from a sole trader to a company, the small business restructure rollover relief, and other considerations that you really need to know about before going from that sole trader to a company, and all those additional costs you're going to incur, but then thinking about what are the benefits of actually incurring those extra costs.
If we're not growing, you're not growing.
Guys, welcome to this channel. My name is Nathan Rigney. I am the Profit Generator. I just want to throw out a quick hello to everyone out there who is continuing to watch my content. I really do value your support. So let's get into today's conversation where we're talking about you guys going from a sole trader to a company. Let's talk about what is a sole trader. If you're starting out and you're thinking about setting up a business, being a sole trader is the easiest and simplest structure to set up. Effectively, it is going to the ATO and getting an ABN, which stands for an Australian business number, and voila, you're a business owner. There are considerations that you might want to think about when getting your ABN, which can be as simple as, do I need to register for GST? Generally speaking, if your turnover you think is going to be over $75,000, so your sales is going to be more than $75,000, you need to register for GST. But otherwise, the setup cost of being a sole trader is quite minimal and it is quite easy. And what you do need to know is that when you're a sole trader, all of your income effectively is income in your own name. So as the name suggests, it's solely about you and you are trading a business in your own name. So you might say that, hey, my name is Barry Williams and I'm gonna open up a flower shop, and it might be Barry's Flowers, but you're basically trading as Barry Williams, trading as Barry's Flowers, right? Easy. And what you might want to do is you might go to ASIC, you might register a business name, or you might not have to, depending on what you're doing. But effectively, whatever you earn is in your name, which also means that income, if you've got maybe a full-time job and then you're doing this on the side, that income's going to go on top of your ordinary income. So it all gets taxed and lumped in your personal tax return. Now, effectively, operating and setting up as a sole trader is not too costly to start with. And if you're starting a new business and you're thinking, I'm not sure where it's going, it might be the best option for you to think about to start with, just to reduce those costs, because setting up a company does incur a lot more expenditure, a lot more cost to operate. But basically, what I do say to my clients when they are thinking about becoming a sole trader, there is one very important thing. You need to make sure you get really good insurance. And what I mean by that is getting a good insurance broker, someone who can understand and listen to what you're going to be doing in business, understand what the risk of what you're doing is, to make sure that you're properly covered. Because if anything goes wrong in that business as a sole trader, you're going to be personally responsible for everything. So you want to have a really good insurance policy. You don't have the backing of limited liability like a company. So when you are a sole trader, just to clarify, you still need accounting software, you still need to be responsible for getting your tax returns done on time, and you're still responsible if your turnover is greater than 75,000, register for GST and lodge BAS every quarter. So let's go on to point number 2. When is it worthwhile actually considering moving from your sole trader to a company structure? Usually, whenever I have conversations on the phone or in front of a client, when they have this conversation, there are a few main points that I usually cover off. The first one is risk. So you want to mitigate risk, and usually it means reducing that personal liability when scale starts happening in your business. So when you find that the volume of work that you have has increased and you can't control a lot of the aspects of that work, when you started out as a sole trader or started out just yourself, you knew everything that was going on. All the systems are in your head. And when you start having staff and your business starts growing, the reality is you cannot do everything. So then you need to bring other people into the business to help everything flow and for things to happen, to make money. So when you do get to that point and you do have staff and you've got this volume of work of turnover, so I guess the amount of money that you're invoicing out, and your jobs are getting larger and now there's a lot more risk, you then want to start saying, hey, I want to reduce that risk by having a company, and that company will provide that. The next thing that I think that's really important as well, after considering really the volume of work you've got and then reducing that risk with who's doing the work, is also the perception. So the perception of running a company versus a sole trader can maybe land you those jobs, those bigger jobs or those better jobs, but even just outside, when people are investigating or looking into or doing the due diligence about you before they engage you, no matter what type of business it is, they might be saying, hey, if you're a sole trader, we don't want to give you that job. But if you're a company, you have a whole lot more credibility because it shows that you are a lot more serious about your business and the structure and how you operate. So there is this little bit of perception, but then also having a company structure also means that there are some providers out there who don't want to deal with sole traders and they only want to deal with company to company. Maybe another reason why you won't want to do it or set up is just that whole perception out there. The last thing that you might want to look at is, and it gets thrown out there quite a bit, is tax planning. Now, just because you have a company doesn't mean that, hey, automatically you go from the highest marginal tax bracket down to, if you're a small business, the 25% corporate tax rate, or if you're a larger business, the 30% tax bracket. What it does mean is it gives you a lot more flexibility and option when you are operating as a company to say, maybe I might retain profits in the company to then use that capital, that money for future investments in the business, which means that maybe you can limit how much you pay yourself and limit the tax bracket you'll find yourself in when you were a sole trader. But it can work out really well in that situation where it can have tax savings depending what you want to do if you want to invest in growing the business. But it's not to say that having a company means that now I'm also saving a whole lot of money. It's actually really quite the opposite, in that you operating a company is probably going to have a whole lot more costs that you didn't have before. You need to remember as well that when you have a company, the company is a separate legal entity to you. And so whatever money you take out needs to either be wages or a loan or a dividend. And typically when it's a loan, it means that money can come to you tax-free, but what it does mean is when you've borrowed that money, it needs to be repaid back. And so what the ATO says is that you need to apply Division 7A, which basically means that if you do take money out of your company tax-free as a loan, that you're going to repay that back, and you're going to pay interest on that loan, and then that income will go into your name over the next 7 years. So I wouldn't say that when we talk about considering moving from a sole trader to a company, that the number one is tax savings. I think the big thing is about reducing that liability that you might find yourself in based on the fact that your business is getting bigger and you need to protect your own family home, you've got to protect your own personal investments and your livelihood, so that you going out trying to make money and trying to make a life for yourself isn't going to be impacted because something drastically goes wrong. And the problem is that we don't have a crystal ball, we don't know what's going to happen. So having a company just means that when your business is growing, you can't control everything. Having that limited liability, if something does go wrong, that you are personally protected. Okay, so let's talk about our third point in going from a sole trader to a company. What is a company and how it differs from being a sole trader? First thing I would say is that a company is a separate legal entity. And that's speaking like an accountant, that's accountanese, that is the language of an accountant. But if I had to put it into plain English, what it basically is, it's more almost like saying you've got yourself in the room, you've got me, and it's like the company is a third person. So the company is actually separate to you. Whilst you might own the shares in the company, you might be the director, and outside perception might be that you are the company, and probably in all reality, you are the company, right? But it is separate to you and it needs to be treated in that way. Because it is a separate legal entity and because it's separate to you, it then affords you this position where we have limited liability. So that liability, if anything goes wrong, because it's separate to you, the liability is kept in the company structure, in the company, the business itself. So generally speaking, any debts that the business has doesn't follow you personally. So if anything goes wrong. Now there is of course a but or a note to apply with that. You as a director, and you'll have to be the director being the sole trader, going from the sole trader to the company director, you do have roles and responsibilities that you need to upkeep. And that is really important because if you don't keep those responsibilities and you don't take a serious approach towards it. If the company finds itself in a position where it can't pay its debts on time and it's forced to go into liquidation, which basically means that all the creditors who are owed money, a liquidator will be appointed to get that money back and pay back those creditors. What I would suggest, if you want to know more about that, I do have a separate video on liquidation that you should check out before, especially if you're thinking about setting up a company. You should definitely have a good understanding of your roles and responsibilities as a director. So it's a separate entity. So it means that when you go and set up the company, it's not going to have the same ABN that you had as a sole trader. That ABN will essentially be cancelled. The company is going to have its own tax file number. It's going to have a whole new Xero file or a whole new MYOB file or QuickBooks, whatever accounting package you have. It is a whole new business, effectively. Where it's different is that it has directors who run the entity, so that has to be you. It's going to be, because it's a separate legal entity, someone has to own that entity. You being the sole trader, you will hold the shares in that company. Profits can be retained, they can be kept within the company, which means that whenever you want to now earn money from that company, you're going to get a wage like an employee, just an employee like you were probably before you started your own business. So you'll get paid a wage. It will have, as I said before, separate tax file numbers, its own new ABN. It's going to have its own bank accounts. The bank accounts are separate to your own bank accounts. So if you set up a company and it's Barry's Flowers Pty Limited, the bank account will be in that name. And the way it differs is that there's a lot more administration in keeping it. So when it comes to, say, for example, tax time, when you have a company structure, there's going to be a lot more emphasis on making sure that you have a profit and loss that matches the actual trading activity. You're going to have a balance sheet where the balance sheet lists all the assets and liabilities that company has. But how it differs most from being a company versus a sole trader is that limited liability. It's about more than just saving tax. It's about you now having a company here and having the options to be able to scale, being able to be sustainable, and really importantly, we go back to that limited liability, it's about protecting your family home, your assets, and just really having a business that starts to serve you instead of you potentially going out there and taking all this risk and then possibly as a sole trader losing everything if something goes wrong. So the good news is, because you are going from a sole trader to a company, technically speaking, you're actually selling your sole trader business to a company structure. And so this comes back to our fourth discussion point today, is using the small business structure rollover relief, which basically is allowing the capital gains on the goodwill and the equipment you're selling from your sole trader business to your company, means that there's no tax will apply, which is great. But there are a few things that you need to apply or look at before you go and do that to make sure that you can apply the small business rollover relief. First thing is, you need to make sure that your turnover is under $10 million. So if your turnover is over $10 million, the small business relief will not work for you. But if it is under that, and your rollover of going from a sole trader company, it needs to also be genuine in nature. So it needs to be a genuine rollover. It's not some sort of tax scam or some sort of tax scheme or something to get out of doing tax or whatever else. It's a genuine, like I've pretty much described. The reason you're doing it is because you want to just go to a structure that really suits the continuation and the growth of your business. So two things first. Your turnover needs to be under $10 million and it needs to be a genuine restructure. Now, the third thing, which is really important, is that it needs to be the same economic owner. So the same economic ownership. And what does that effectively mean? Well, it means that you as the sole trader, the person, when we set up the company, owns the shares. So when you're a sole trader, you 100% owned that business. And so when we restructure you to avoid the capital gains on basically transferring your business from the sole trader to the company, the way we avoid that capital gains tax is by making sure that you, using the small business restructure rollover relief, is that you are the same economic owner. And so that means that basically that you're going to hold 100% of those shares. We can do this in one of two ways. So the first way is, if we just set up a company and you own the shares, we might have 10 shares, 1 share, whatever, but all the shares are in your name. Simple. But what you might want to do is, whilst you're resetting up and restructuring, you might be thinking, hey, I might want to hold my shares in a family trust, or what we call discretionary trust. And there is, like I said, another video on this in all my videos there about how a family trust works. But basically what it would mean is if a family trust was to hold your shares, that you just need to be the main beneficiary of that trust, and the corporate trustee, all the shares need to be in your name as well. So effectively, what is really important is that when you do want to use this small business rollover relief, is that turnover is under $10 million, it's a genuine restructure, and you are the same economic owner, and so you basically have that primary ownership of that business still. There is one downfall when we talk about the small business restructure rollover relief. And whilst you can transfer all your equipment, all your goodwill to the company, there's one downfall. And the downfall is when you have vehicles or equipment in the company where there might be finance, or transferring that vehicle equipment might involve paying stamp duty. Now, if, say for example, you're changing your company from a sole trader to a company, and I had this just recently with one of my clients who had bought a vehicle within the previous year of changing over. Effectively, what it did mean was that if he wanted to have the vehicle in the company, he would need to pay stamp duty on transferring the vehicle. But the second point is that he would have to refinance the vehicle. So that's probably the only downfall really, but there are things that we can really do around that to keep that vehicle still in your name and still get a tax deduction and still have it work in favor of this rollover and having the company structure. My final point on the restructure rollover relief is that you really want to also work with a lawyer or your accountant to get this structure done right. So that means that when you set up the company, I suggest that get your accountant to do it because they know what they're talking about, know what they're doing. You want to make sure when you set up the company that you get a company from a provider that can also provide a company constitution, but then also you might want to work with a lawyer so that they can put together a sale agreement. And the reason that is important is because we need to have a contract of sale. We need to have some documentation showing that this transaction is happening. And we want to make sure as well in that contract that this is a going concern, which then basically means that there's not going to be any GST that applies on transferring the assets from your sole trader entity to your company structure. So it's really important to make sure that if you are going to do this, that you work with an accountant to make sure it then applies to you and your situation. So that leads us to then our fifth point. Let's talk about other considerations. Because whilst it's really good to basically understand that there are some benefits, there are some costs to the benefits. And what I would say is before we go into those costs, you gotta remember as well that in business, no matter what it is, whatever the costs are, there needs to be a return on that cost or that investment. And think of it this way, that yes, there are gonna be a few more costs, but those costs could mean that it protects you in the long term, but then also gives you the ability to also grow as well. So what are other costs that you're going to consider when operating as a company versus when you're a sole trader? To start with, you're going to have that initial setup cost of setting up a company, but ongoing every year, ASIC does charge a fee for keeping your company open. And then on top of that, your accounting is going to become a little bit more complex because there's a bit more work involved in it. So your accounting fees and your tax return costs will go up. So whereas before when you did your sole trader return, you still had to keep your accounting reports and all that anyway. You still had Xero or MYB or QuickBooks. But now you're doing a set of financials like you were before, but then also now you've got a company return to do, and then you've also got your personal tax return to do. There's a little bit more cost in it. When you were a sole trader, you didn't need to pay any superannuation. You didn't have to if you didn't want to. And when you're starting up, that could be a great cost saving to get going. It means that you can pour a lot more money into actually building up the business. But when you're a company, you need to pay yourself, typically you're going to pay yourself wages. And so when you pay wages, and remember that the company is a separate legal entity to you, when it's paying you, it's going to be paying you as wages. So when you have payroll, there's always super guarantee on top of those wages. So you're going to have that expense, which you didn't have before. And from the 1st of July, 2025, the super guarantee is 12%. So as a really simple example, if the business was paying you a salary of $100,000 gross a year, you now have on top of that $12,000 of super that you're going to have to pay on those wages. Previously, for your own earnings or what you would have got as a sole trader, you wouldn't have had to worry about workers' compensation. That is an insurance basically that covers employees if they get injured at the workplace. So whilst you might have had some insurances, generally speaking, to cover any liability, and you might have had even just some personal insurances. Now, as a company structure, because once again you're a separate legal entity and it's paying you wages, you now have to add your wage in to a workers' compensation calculation. And around the country, every state is different. Every industry's got a whole lot of risk. For me, for example, sitting here in an office, the likelihood of getting hurt is very low. I might get a paper cut. That's probably the worst thing, right? But if you're in a building trade, for example, there are so many things that are more risky that you're more likely to find that there's more likelihood of getting hurt. And then when you do get hurt, the costs are going to be a lot higher. So those insurance costs are going to be a lot higher. So really want to have a look at what those insurances are. You also want to think about as well, like when you do set up your company, you want to think about what other licenses you have and seeing, well, are those licenses going to cost any more? It might be as simple as just letting your professional body know, whether maybe it's a builder's license or whatever license it might be, but it might be that, hey, you need an additional license for the company and one for yourself. So that might be an additional cost that you have. Now as well, you're going to have, you being like going back to that whole payroll thing, now you're actually doing payroll for yourself. So if previously it was just you in the business, you didn't have to do any payroll, but now you're going to have to do regular payroll. And it's now also a little bit more juggling when it comes to your finances, because you want to, and this is where Profit First comes in really handy in being able to say, I'm going to park money here for GST, I'm going to park money here for personal taxes, going to park here money for operating the expenses for the business, and this is how much I'm going to keep for my paying myself. So there's a lot more juggling with finances, and now you're going to be a lot more responsible in making sure that there's enough money there for all your liabilities. And you really want to be on top of that, because you don't want to be in a position where the company can't pay its debts when they become due and payable. Because otherwise, what can happen is you can then personally become liable for those debts if the company is seen to be trading insolvent. Additional costs you're going to have as well is like now you need extra bank accounts. So you've got your own personal accounts, which you've always had, but now you're going to have some bank accounts for the company as well. And so on top of that, like otherwise though, there are those extra costs there, but otherwise, generally speaking, running a company is fairly the same. The insurances typically are going to be the same as well. It's just that now you've got an additional one with workers' comp. There's a little bit more work involved in it. But I think what you need to consider is you need to consider the benefits of what it's bringing. So whilst those costs are there and you can't escape them, it's also bringing a whole lot more benefit. And hindsight is a wonderful thing if only you can see what's going to happen in the future. And you don't know what's going to happen in the future. You don't want to have your house at risk. And the reality is, as you grow bigger and your business starts to scale, you can't be overseeing everything. There are ways around it, setting up really good systems and processes to help control that, but it's never going to reduce the risk to zero. So having a company means that yes, you still need to have all the insurances you had. You can't just go, hey, because I've got limited liability, I don't need any insurance anymore. You still need insurance. But what you do have now is that if it all goes terribly wrong, that you basically have the option of using the limited liability and keeping those debts in within the company, which means that your personal livelihood is protected. So guys, that is my quick summary on all the things you need to consider when looking at going from a sole trader to a company structure. Remember today, guys, as well, that everything we're talking about today is being general in nature, and I don't know your personal circumstances. So it's really important that you do go and speak to your accountant. Speak to someone about what's happening currently in your business, and then really use this video today to just soak up some general information and just research enough so that then you can go to your accountant and say, hey, I think this is something I want to do. Guys, that has given you a lot of thought. What are you doing this financial year and what are your goals? Is it time for you to set up a company? Is it time to move on from a sole trader and step up to a company structure? What's going to be happening for you in this financial year? I look forward to present more of this content to you. Lastly, before I go, guys, if you like this video, you like this content, give it a thumbs up, give me a like for me if you can. And you know what, if you really do like it and you know someone also who's currently a sole trader or currently in business and they're looking to step up and change their structure, send this video over to them, please. And lastly, if there's any content that you would like me to put together, please let me know. Write a comment, send us a video, do us whatever you need to do to get that message across to us, and I will film that content for you. Guys, see you next time. Thanks for tuning in. Goodbye.